Hi, everyone. Welcome back to another episode of Tech Talk, where Amit and I talk about various technology related topics. This week, we're going to talk about a very interesting topic, a topic that's been quite popular for quite a few months now, is Web 3.0. This is a new technology based on the blockchain technology, and a lot of people have recently been started to being aware of it and became really popular a few months ago. Now it's kind of settling down, but it's still offering all the modern technology and all the benefits as it should. So yeah, we're very excited to talk about Web 3.0, and it is essentially how what the internet will look like in future. So very excited to sort of dive deeper into this topic. Amit, thank you very much for coming up with this topic. And let's dive. What's your thought on Web 3.0?
Well, it's a very interesting topic. I'm pretty sure the audience must be thinking, what is Web 1.0 and what is Web 2.0 then? I mean, if you're talking about Web 3.0, definitely there has to be a Web 1.0 and 2.0. So I am pretty sure people must be curious about that. But nevertheless, I think it's a very relevant topic to talk about Web 3.0 today. We have covered a lot of topics like cryptocurrencies, CBDCs, NFTs, blockchain, AI, metaverse, etc. And somehow or the other, they are interlinked or they are connected to this topic that we are talking about, going to talk about today, Web 3.0. So yeah, I'm quite excited to talk about it.
Yeah, as you said, they are all interlinked, and they are all interlinked in a very nice way. And hopefully, the audience have tuned in with our previous episodes on all of these topics, and that way they can have an overall idea and understanding of how all of these things link together. And sort of then potentially from all of these ideas, you might even think about another new technology that can come up, that can sort of come with combining all of these things. So, or you could think about how you can use Web 3.0 in metaverse, or how you can use one technology in this other arena, etc. So there's always these exciting possibility of interrelations, which really excites me, to be honest, thinking about these things, how they all intertwine with each other and create new connections, and that's really exciting to me. So as you were talking about Web 3.0, there must be Web 1 and Web 2. What about those? What give us a little bit of background on those?
So
I
I
mean,
mean,
for
Web.
me,
Yeah, go ahead. You
sorry,
go ahead.
for me, I just know it in one line. Is Web 1 is the static websites. Web 2 is what they call interactive or dynamic website, and Web 3 is more like a smart website. But it's not just websites, it's the domain and everything that comes around, getting your message across to the world through internet. So yeah, give us a little bit more detail on these.
So initially, when the internet was created, people built web pages or HTML pages, and they bought a domain and they hosted the content. There was no way for people to actually find new content until unless they go to some place where they were curating it. So content curation became the starting point, and then as the number of pages progressed, search was necessary, and that's how Google Search, Alta Vista, and many other companies came up, and they became very popular. But in essence, whenever those pages were getting created, they had images, they had text. Not, I don't think they had much of videos. They had maybe animations, like simple image animations, but fairly simple text and images. So that was the initial web that we all started with. And after that, we started getting interactive web pages, pages where you could interact with the page, the website itself. You could make payments, you can watch videos, you can listen to audio. You don't have to you don't have to go to a new page every time. You can reload the content of the page by keeping the URL static. So those kind of things started happening with Web 2.0, and that's what has been shaping the majority of the last decade or more than that. And it has picked up very rapidly. And in this Web 2.0, we had all the social media apps, we had the Netflix, we had payments, etc. All those different types of apps. Now, Web 3.0 actually started with the advent of the blockchain technology or Bitcoin. Bitcoin is actually based on the blockchain technology, and blockchain technology enables many things, but in essence, Bitcoin is a decentralized currency or a cryptocurrency because it's cryptographically encoded. So, Web 3.0 is basically built on top of the blockchain, and what that means is, in essence, it's decentralized. So Web 2.0 was more centralized. I mean, Facebook owns all the social media platforms like Instagram, WhatsApp, Facebook, the Oculus Quest, VR division, etc. So those are centralized. Google owns the search business. They own Gmail, Google Maps, Android, many other things. And same with Apple, Microsoft, etc. So they are basically owned, the servers on which our information is stored is owned by them. What if we have a future
And
where we own the data?
another aspect of it being centralized, sorry to interrupt, is also the fact that there are companies, private companies, who controls the hosting of it and also the domain registration. I mean,
Yes.
there is a like a, if you want to call it guardians of internet, the ICANN, the
Yeah.
organization who kind of
But they give the
decides.
domain names, they don't give the infrastructure.
Yes, yes. So these infrastructure are privately owned by different companies. So they're
Yes.
not decentralized. They are centralized in that respect. And then there is this central authority which decides which top level domain are available or which
Yeah.
ones to
Yeah.
release in the future, etc. So these are like central authorities who decides all of these things, and that kind of takes away the users, if you want to call it right, yeah, in a lot of debatable way, it is right. Users' right to a lot of their data and a lot of the things that they want to use or do in internet. So yeah, so from that
No,
perspective also,
I think
it,
you're absolutely right. The right of their own data. I think that's a very important term because
Mhm.
if we use Facebook, then we are bound by US laws because Facebook servers are mostly in US. And if we use a European service, we are bound by GDPR. So the companies are bound by GDPR. So the rights are very important. And as you mentioned, it's about our data, right? Our data on Facebook server or Microsoft server, Google server. So the domain names managed by ICANN, then you have the physical servers on which our data resides. So even when we are talking now, we are recording this on Zoom, we will maybe put this video on OneDrive. So that OneDrive has our video recording and that's owned by Microsoft. So we don't own the data. So tomorrow if Microsoft shuts down, our data is gone. I mean, of course, they would give us notice by being an ethical company and etc. etc. But in a sense, they are now the keepers of our data, and that's called being centralized. Now, what if you live in a world where you own the data and you can take it from Facebook to Microsoft to Google wherever you want, and even if one company shuts down because you own the data, you just take it and take it somewhere else. So that's what, in essence, what decentralized means, that it's not centralized with one person. And that's what the concept of metaverse is. Like you can take digital assets from one universe to another universe without thinking about how do I take it, how does it work, etc. And same with your information, your data, your identity.
yeah, absolutely. So yeah, sorry, I interrupted you. You were talking about the decentralized aspect of Web3, and
So yes, I mean a decentralized aspect again. So as I mentioned, the information currently is centralized, but with the advent of Bitcoin and blockchain, it became decentralized. Now, blockchain in essence is a ledger, and that ledger keeps track of information of credit and debit, who owes what, who has given whom what. So I pay Rinat Malik 10 bitcoins. Rinat Malik pays X 20 bitcoins. So who owns how much bitcoins based on the wallet, etc. So that is tracked on a ledger. That ledger predominantly is owned by banks, in today's world, but in Bitcoin's terminology, that's in blockchain. So that blockchain is a decentralized ledger. Now, what do you mean by decentralized? So the ledger is there written on blockchain, and anyone can copy the entire ledger on their machine if they want. And for any new transaction, they can try to add the next transactions onto the ledger and keep a copy of it. To maintain the copy, Bitcoin network gives the miners who actually mine the bitcoins some sorry, who want to add the transaction, they have to do some mining, and basically they have to find a cryptographic hash that enables them to attach the transactions, a group of transactions, to the end of the blockchain. And that, in essence, is what's happening in decentralized one. So I can own a copy of the blockchain ledger. You can own a copy of blockchain ledger. Person X can own a copy of the blockchain ledger. And once they have a copy, it means now if one ledger goes down, someone else has a copy. So even if one node or one person fails, the others have a copy, so the information is not lost. And that's what you mean by decentralized. So the information always stays, and it's not owned by someone else, it's owned by everyone. There is no single person who is maintaining it. But even in a decentralized one, and we will talk about this later, there is some kind of centralization. So yeah, go ahead.
Yeah, that's another thing. I mean, as much enthusiastic I am about adopting the cryptocurrency and this blockchain technology, it's just a little bit frustrating to me that when I think about how it's kind of panning out in our world, is that we are kind of ending up with some clusters of central authorities or exchanges where most of these transactions are happening, like Coinbase or Binance. They now, yeah, they're not central bank, they're not any authority. They are private companies, which is even riskier if you think about it. And a lot of the data is central to them. Yes, but the difference is then you can also have a copy of the whole of the public blockchain, and you can do the validation yourself. You can, but right now, Bitcoin mining, doing this validation is in a sense what we call mining. And now the Bitcoin mining has become so difficult so that you can't, with a single computer, you can't really do the validation on time, the calculation power necessary. You can't generate it with just a single user computer. You would need a like industrial grade, like proper powerful, a machine, which is kind of out of bounds for a regular technology user. So in that sense, Bitcoin has kind of centralized itself to a number of companies, although still it's not like one authority or anything, but all of these companies are private companies, which can be is debatable whether it's a good thing or a bad thing. But yeah, it just seems like that the one of the main selling point of this blockchain network is kind of slowly becoming a little bit controversial. But enough of that. Moving right back to Web 3.0. Obviously, to understand Web 3.0, we needed to understand blockchain and the public ledger, as you explained, Amit. So now, what happens in the networks like Ethereum and some of the other modern blockchain technologies is that you can create smart contracts within these transactions, and these hold the data. And I would really recommend you guys to go back and watch the NFT episode that we did, where we explained this technology in a little bit more detail. And what happens is, in that public ledger, instead of just having the transaction saying that, oh, this person gave this wallet gave this other wallet this amount of Bitcoin or whichever coin, you could also say that this piece of digital asset, be it picture, animation or video, audio, whatever, is owned by this particular wallet. As a result, publicly worldwide, everyone knows and agrees that who is the owner of that particular piece of digital asset. Now that's how NFTs work. And now if you think about Web 3.0, in one of the fundamental concepts of web is domain names. You need to have website addresses or links or URL, which we all know what it is, the address where we want to go to, and the address that as a content provider you want other people to come to, etc. And that that domain name is basically etched into the Ethereum or any other network, saying that this domain is owned by this wallet, or in cases, wallet is also connected to a user, etc., etc. So you can kind of say that this domain name is owned by this person. Now, the benefit of that is you don't have any yearly fees, because once you are owner of it, you own that domain. And that's massively beneficial for the user, like people like you and I who creates websites and wants to have domain names. And right now in Web 2.0, all the domains, including Facebook, Google, they have to pay a yearly fee to be, to keep owning the google.com, facebook.com, or rinatmalik.com or whatever. And the central authority ICANN has also a little bit of very tiny pennies of charge on there as well. But yeah, it's all maintained by private companies, and you don't really have much of a say. And even the hosting provider, you have to pay the hosting provider, which you can also kind of do yourself. Technically, you can kind of host from your computer, which is massively impractical, but you can. Yet, if you had a really popular website which needs a lot of bandwidth, you want to go to a hosting provider. And then now, if you're doing something questionable, like Signal, for example, a few months ago or last year, when they were hosting this new messaging service, and which was kind of disrupting the social situation.
Yeah, that
Messaging
happened
a little
because
bit.
WhatsApp changed its policies and people were like, okay, let's move on to some other platform.
Absolutely, yeah. So what would you do if private companies like WhatsApp does
Yeah,
things like
yeah.
that, right? So you need some sort of protection, and in other in the other side of it is the freedom of speech and freedom of expressing yourself. So if you want to express yourself, then you don't want to be guided or restricted by your hosting provider. They might say, oh, you can't host this or that, etc. So all of these restrictions can be, you can find ways to not have those restrictions in Web3, and you can own the domain for life. And these are some of the benefits just to start with, and then there are so many other technological benefits when you combine all the other technologies, NFTs and metaverse and stuff like that, which Amit, you can explain. But yeah, this part I just wanted to say that this part is quite exciting to me. That it's like a fundamental difference between Web 2 and Web 3, because you once you own it, you own it. It's etched in the blockchain forever until you're selling it off to someone else, and again etching it in the blockchain. It's yours, and the whole world knows it and can validate that that you are the owner. So that's quite a cool thing to me. One of the other thing I wanted to also touch upon is some of the providers of Web 3.0 domains that in current world, obviously there could be more in future, or maybe there was more in the past. But one of the most popular ones is unstoppabledomains.com. And they're providing a few top-level domains with .crypto, .wallet, these kind of top-level domains, and then you can purchase the domain names that you like. I, for example, purchased rinatmalik.crypto. Not that anyone else was going to, but I wanted to test with one, and it is quite cool. You basically, the purchasing is actually a lot more expensive than Web 2.0, because in Web 2.0 we're here in UK, so we use pound sterling, and it's usually £10 sterling for every year. And usually the domains I buy from Google Domains, you just buy for 10 years for £100. But Web 3.0, you have to remember it is kind of like an NFT. So you have to first um, pay the fee to own it, and then you have to pay the gas fee if your domain is going to be on Ethereum network. Obviously, depending on which network you use, it would be different fee. But Ethereum gas fees are also quite expensive, so it was more over £100 for me to own that. But now I own it forever, and until I sell it, it will remain mine. And I don't have to pay any maintenance or yearly fee of any sort. A counter to that, there is also another top level domain which is .eth, .eth, and
Yes.
there you have to pay a yearly fee. And people might ask them, how is it Web3 if that's the case? Because over there, what they're offering as a company, which obviously is down to them who are, owning the Ethereum network, or so they are offering you to lease the domain. That's why you have to pay. They're not giving you the ownership of the domain. If you were to own it, then it was going to be yours and no one could do anything about it. But the reason you have to pay a yearly or periodic payment is because you're not owning from there. So I wanted to I wanted to check out, and I wanted to buy one just to. And when I did my research, and I didn't want to buy, I mean, although .eth sounded more attractive to me, and I thought, okay, .eth, that sounds like, it's Ethereum and all of these cool. But then I kind of backed off, because one of the primary, foundational benefits, I thought, it's not just about the benefit, but it's the feature. It's one of the USPs of Web 3.0, that you don't have to pay ever again. And that it's not just about paying, but it's a representation of how the whole technology works. And they weren't letting you do that. So I kind of, even though I liked the .eth, would have liked it, but I kind of went back to Unstoppable Domains to go with them, where I got the domain
Dot crypto.
ownership,
Yeah.
although more costly, but I did own it. I do own it, and will own it. So yeah, that's the part that I find really cool.
So
And
I think you touched about I mean very some of very interesting aspects of decentralized network. I think in the beginning we started talking about the concept of centralization. I think it all comes down to two things. One is infrastructure and one is marketplace. I think these are two very important concepts people want to understand. So in the real world, there is someone who always maintains the infrastructure, like someone is there to maintain your supply electricity, supply water, and clean your streets, and supply heating, etc. They supply internet. So those are the infrastructure. And then you have marketplace. So instead of going to one individual location to just buy a pair of shoes, another location to buy vegetables, another location to buy groceries, you go to one single place where you can buy everything. So you can buy all the grocery shops and everything. So that's a marketplace. Now, in a digital world, if you want to replicate that, there will be some kind of centralization, just like in the real world. So there will be some person or some entity that will provide the infrastructure, and there will be some exchange where you will actually go and buy these currencies or these coins, cryptocurrencies, etc. So there will be always some level of centralization, even though we say it's decentralized. I think that's that. I mean, if you get these concepts clear, then I think it just changes your mindset. You own the data, so it means you can take the data from one network to another network. No one is stopping you, but someone is still maintaining the infrastructure and someone is still owning the marketplace or the exchange where you actually trade in those currencies. So you say you're owning the NFT, but NFT is being created by someone, it is maintained by someone. You only are choosing, or sorry, you're only proving the ownership rights. You actually don't own it in real terms or physical terms. It's actually kind of renting. You're renting, but indefinitely. That's what NFT is.
is that what it is? In my head,
Think like this, because you own the asset and there is proof that you own the asset, but it's
Hmm.
not like you have it. It's within
But
that. It's within that. So
when you
if
say you
suppose
have
you,
it,
so when you say it's there in OpenSea, right? You buy the NFT from OpenSea. Can you
yeah.
then take it to another NFT marketplace, or it stays on
So if
OpenSea?
it's in the same blockchain network,
Yeah.
and another marketplace is also using the same blockchain network, you should be able to take it, as far as I understand it.
So again, another interesting concept. So when we talked about blockchain network, that blockchain network we are referring to Bitcoin's blockchain network. That's essentially
Or
pe-
Ethereum
or
nowadays with
Ethereum,
NFT.
exactly.
Yeah.
But those networks are different. So people also need to understand that bit as well, that there are two networks. One is for Bitcoin, one is for Ethereum, and then there are different networks for different cryptocurrencies. So it means you have ledgers which are tracking only one single type of currency. Now there is this whole concept of multi-ledger or multi protocol
Or
where,
cross
yeah,
transfer between
cross ledger.
each
So
blockchain. Yeah.
basically, in the single ledger, you can track different cryptocurrencies. You can track Bitcoin, you can track XRPs, you can track Ethereum. So that again is a very interesting concept which people are trying to deal with, because if you have just one single ledger to track one single currency, how is it decentralized? Because now we have so many different currencies, and we want to move
Yeah.
that information, that transactional information of one particular currency from one ledger to another ledger.
Yeah, I don't know a lot about this part, but yeah, I didn't know that. I knew that you can kind of communicate between the two blockchains, but I didn't know whether you can track all of the different cryptocurrencies in one
Exactly,
ledger.
exactly. So that
But
that would be the next level. I am also not sure whether it's already, but I've read about it that people are trying to solve this problem, because this is a very interesting problem, because as you have different cryptocurrencies which become popular, sometimes Dogecoin comes and people start buying that. So you need to have a network, and then each network has. So you mentioned about Ethereum smart contract. So that's basically proof of stake. And what Bitcoin network does is proof of work. So you have to actually show that you have mined something in order to get some bitcoins. And in Ethereum network, it's proof of stake. How much do you actually own? And
oh, I
things like
think
that.
that's Ethereum 2.0, by the way.
Oh, that's Ethereum 2.0. Yes.
Before the previous version of Ethereum is still proof of work, but in a different. I
Yeah,
need to
so that
refresh.
also keeps evolving the definition, and that's
Yeah.
again the beauty of it. And you mentioned about top level domains, and that's kind of interesting. It's basically a digital asset that you own, but of course you keep paying the rent every year, or if you buy it in bulk. So 10 years. So I have the domain amitsarkar.tech, bought it for 10 years. I don't have to pay any money. In UK you pay about 100 quid, £10 a year. That's about it. It's good, but after 10 years I have to renew it. And if I don't, then it gets stolen by someone. So there is this whole concept of domain reselling and other things. Some people just buy domain names for a business so that they can sell it at a premium when someone else needs it. And there is a whole big business of it.
Absolutely, yeah, domain. I mean, that's how the dot-com bubble kind of was created a couple of decades ago, where everyone thought that this dot-com domain name would be so
Popular.
sought after
Yeah.
in future, and a lot of people bought and then realized that
So the
that was.
moment a domain name expires, what people do is they jump on it and they try to buy it if it's very popular. So if google.com expires for some reason, for a
Mhm.
millisecond or even for a second, someone can actually buy during that time. And if they buy it, Google then has to negotiate with that person to give them back the domain. And this is completely legal. There is nothing illegal about it. You can.
Yeah, I mean, of course, yeah. I mean, it's
It's
if
not
it's
like they're
open for
cheating Google.
sale,
Yeah.
someone purchased it,
Yeah.
and then yeah, there's no question of legality. I mean,
Yeah.
it's supposed to be legal,
Yes.
yeah. So it is interesting how these things happen. But yeah, that's Web 2.0.
and
But
and
yeah, when it
and
comes,
now in the decentralized world, so you have the domain name and then you have your data. So there are governments. So Estonia is one of the few fully digital countries in the world, where everything is digitized. The whole citizens health records, sorry, medical records, educational records, financial records, insurance records, they are all owned by the citizens. So it's stored in government servers, but they are owned by the citizens. And if they want to change the provider, they can take the data with them to the other provider. And again, that's enabled by blockchain. So that's what Estonia is trying to do. And in the blockchain world, we now have NFTs, so that's enabling us to buy digital assets. Then we have metaverse, where we have it's not a virtual world, it's virtual worlds where you can own assets using NFTs, and you can move from one world to another world. That's also being enabled by virtual reality, augmented reality, extended reality. So these are all connected. Then you have these concepts of decentralized apps. Rinat, you were mentioning just before the talk about decentralized apps, or DApps as they are called. Can you talk a bit more about that?
Well, to be honest, I haven't really delved too much deep into decentralized app, but I'll say what I've seen after logging into Unstoppable Domains after I bought my Web 3.0 domains, and there some of the benefits that the domain brings is through dApps, and that's how they make it possible. And one of them is to have your wallet address as your domain name, or as personalized email, or something that a string of words that are easier to memorize, and you make that connected with your wallet, so you don't have to remember your 26-digit alphanumeric
Yes.
string to everywhere. And there's less chance of making a mistake as well, even though it's really highly recommended and encouraged that you always copy and paste and never type that by yourself. But yeah, I mean, so that's one of the benefits. And then another thing is that you could I don't remember much, to be
Okay,
honest.
it's fine.
But
If you take the concept of decentralized apps, so take for example Twitter. Twitter is an app, right? Twitter is an app. Now, what is the decentralized version of Twitter? Decentralized version of Twitter, there is an version, and that's called Mastodon, Mastodon. It's the sign of basically a mammoth in olden days, or a big elephant. It's actually a, a Twitter server, but it's open source. Anyone can host their own servers, and anyone can host their own Twitter space. And you can either keep it free, you can keep it paid, or you can ask people to get invited to the network, etc. There is one network maintained by Mastodon, and there are other networks maintained by other people, and it is kind of like a decentralized app. And it is very interesting that the whole concept of Twitter, what it means if it's taken to a decentralized version. What would be the decentralized version of Facebook? What would be the decentralized version of, say, Google Search, or Google Maps? And those are the kind of things that people are now thinking about and talking about, and it's actually progressing very rapidly. Then we have, so there is DApps, and there is decentralized autonomous organizations, DAO or DAOs. And they are actually very interesting. It's basically a small company or a small entity that is completely decentralized. That means there is no hierarchy, there is no one at the top, no one at the bottom. Everyone has some stake, some ownership, and a voice, and no one is in charge. Everyone is in charge towards a common goal. So they work on certain projects, and everyone decides whether they want to work on the project, and how much time would they dedicate. They have proposals, etc. And it is very interesting how it is self-organizing and self-sustaining. And these DAOs are now currently based on mostly Ethereum network, but it is again very interesting subject. I think we'll do another talk on DAOs, but it's a very interesting thing to look at.
Yeah, absolutely. And all of these, sub topics are really interesting. And some of those things I don't even I have much idea, and I also want to find out more about these things. But one of the things I would say, and as we always do, we encourage our audience to, find out more. Do a little bit of test. In our previous episodes, we also said that try it out. But there is a question of affordability as well. To buy a like a sort of a Web 3.0, you can spend upwards or more than £100 in pound sterling, and it could be more in dollars and other currencies, etc. So obviously, depending on your affordability, I would also say that, yeah, try going there. We're not sponsored by Unstoppable Domains or anything, but there is another issue currently which I've heard with .eth domains, that Ethiopia, the country, they
Okay,
also
yeah,
have
yeah.
in Web 2.0 domain naming system. Um, as a country, for example, in UK we have .co.uk, and .uk is the last part of the domain names, and in Ethiopian country domains, you get .eth. And then again, in Web 3.0, you are having for Ethereum, you can buy the Web 3.0 domains which are .eth. There is a quite a lot of confusion with how this is gonna go forward and what we're gonna do about it. But it's interesting yet. But if you are gonna just test it out and kind of want to do something, then probably .eth is a bit more riskier option. But then again, you go and make your own research, do your own research, and make a decision based on that. I've gone for Unstoppable Domains, but again, they have other controversial,
Domain
activities
names.
as well. So yeah, I mean, because what I've seen is they are obviously trying to sell various domains, and obviously they are a private company as well. So there is that kind of scare of lack of centralization in my mind. Obviously, not everyone might agree. So yeah. But would definitely encourage our audience to go for one and see how it is. And once you own it, you can never lose it. So
That's the
in
interesting bit. And
yeah. So
I think when we talk about decentralized domain names and other things, I think it's very important to understand what's happening currently. We have Facebook, we have Google, Microsoft, Apple, many other big companies who actually own our data and they provide us certain services for free. All the social media platforms that we use are free. All the email apps that we use are free. And there are many other things that are free that we use from these big organizations. Now, well, it's not essential, it's not free because we pay that with our data, with our information, with our transactions, with our internet history, etc. In this world, the ownership of data is within these companies. So that's why we call it centralized. In a decentralized world or Web 3.0, this won't happen. So even if we start using Facebook or we use a decentralized app like Facebook, then we own the data and we can take the data out of it any single time. We've talked about it, but I think you need to understand what's happening. So now, as Rinat mentioned, you own the domain forever. You don't have to keep paying it again and again and again just to have it. Similarly, you own the data forever. You don't need to go and you don't need to negotiate with someone to, give your data. They have to give you, or you can just take it away. That's the beauty of being decentralized. It means everyone has a copy and no one has ownership and everyone is there for it. A similar concept is like BitTorrents, peer to peer, that has happened in the past. So in peer-to-peer, there was Napster. So if people had a copy and they are on the same network, if anyone searches for that particular file, they can easily download it to their computer because it's available in that network, Napster network. Similarly with BitTorrent, If you have a piece of that file, you can download it. And normally in a network, everyone seems to have some a complete file. So it's like just having a ledger. Now you have the complete ledger and you own it, you maintain it. So you are essentially preventing the system to collapse just because one central system has collapsed. That has happened during the economic crisis where our banking system collapsed because of the mortgage industry. So in this case, we can prevent such collapses because it's decentralized and the network would be tolerant to such collapses. If one ledger fails, we have the records of everything else and we can track where the money actually is. If not to the person, but at least to the wallet. Decentralized network also gives you anonymity. So that's again a very good thing. In Web 2.0, you have to actually prove your identity again and again, again and again. In decentralized world, you can always trade with a wallet.
But wouldn't it question the security and privacy? I mean, if someone can be anonymous, I mean, criminals could use that to their advantage.
And
So
they use that. That's why a lot of criminals have now moved to the Bitcoin or the or
but
cryptocurrencies.
to be honest, I mean, cryptocurrencies, but in Ethereum or Bitcoin or some of these popular networks, you can't be anonymous because,
No, with the
whenever
wallet you
you,
can be. You can with your wallet. See, on the ledger,
but
it's just
you
your wallet
can't have a
address.
wallet without identifying yourself to,
Yes, now
Coinbase and
because of
other
the
places.
exchange, so you'll have a wallet say in Coinbase or Binance, and now because
Yeah.
they're heavily regulated, they have asked people to start verifying their
So
identity.
so yeah, that should give some sort of comfort that you can't do criminal. I mean, if you were kind of associating Bitcoin or cryptocurrency in general with criminal activities, that's not necessarily the case.
Yeah, yeah, yeah.
But then again, if a criminal wants to, then what they can do is they can have an offline wallet created and then use something called a tumble dryer, where they can anonymize the money and then send it to that offline wallet and then own that. And then but this is vastly difficult, and that makes the same argument about cash as well. I mean, right now, nowadays, using cash is much more difficult. You want to use a card, you want to make online payments, but if you want to be a criminal and you want to have traceless transactions, you use cash.
Cash.
Now, it's the same thing. If a criminal wants to do crime, then they're going to find a way, like they can find a way now with fiat money using cash, or there are other ways of using digital, using fiat currency digitally as well, and anonymously. So Bitcoin or any other cryptocurrency, for that reason, is not necessarily associated or encourage or enables crime in any way. It's just similar
Yes.
difficulty as if you were to use fiat currency.
I
Um,
think the key point is that a key point for people to remember is that it offers the anonymity, but because it's again part of a centralized say exchange, Coinbase, Binance, other things, and they are regulated. They are legal entities. They are companies. They are organizations that make money. So they are governed by the law of the state, and because they are governed by the law of the state, they have to now validate the kind of activities that occurs on their exchanges, and because of that there is some form of regulation. It is of course offers protection for everyone, their money, their assets, but it also means that there is some level of now centralization. So
Another interesting part, just because this has come as part of the topic of we're not directly relevant to Web 3.0, but if you in UK, if you own more than £5,000 worth of cryptocurrency in any format with Coinbase and Binance and some of these popular exchanges, then they are legally bound to give your details to HMRC,
yeah.
the Revenue and Customs of UK. And you need to declare that when you do your yearly tax return. So if you have any transactions based on the amount you gained or whatever, I don't know the exact calculations, But
Basically,
obviously,
it's a capital gains tax. So you'll have to pay some capital gains on
what I
cryptocurrency.
have heard is it's not just as simple as capital gains tax, but it
Okay,
also, I mean, gains is when, your
you sell
overall
it, yeah,
transaction, if you increase or if you decrease, then it's a capital loss.
loss, yeah.
But what I've kind of understood, which may I haven't done enough research, so it's take it with a grain of salt. But if you exchange from any cryptocurrency to any other cryptocurrency, how do you know whether you gained or not, or whether you've
Yes,
lost or
true,
not?
true.
So, but even on those scenarios, you would be subjected to tax, or at least you have to declare it. So, definitely, for those of you who are in UK in our audience, or also everyone else, do find out your own country's legal requirements. But yeah. Coinbase, Binance are legally required to give your details to HMRC if you're in UK. Then if you have more than £5,000 worth of cryptocurrency, and you should, or you need to declare it to HMRC at the time of your annual return. So yeah, that's just a little bit of side note in while we are talking about all of these topics in general.
No, but it's interesting to know that because I mean we talked about decentralization, but it's I mean as you can see, the governments want to protect the interest of the people, so there will be some kind of centralization. Of course, people are still trying to figure out how to actually run a decentralized network, how to run these decentralized organizations and decentralized apps, and I think things are getting figured out. But people want convenience, and convenience comes at a cost. So that's why we are still used to so much used to using Facebook and Google. And even if there is a new alternative, people don't want to move because if you move, everyone else has to be there as well.
Yeah, yes, absolutely.
So
So yeah, convenience is actually a big factor. A lot of the times we don't notice it, but it is. And
I mean, when a lot of people moved from WhatsApp to Signal, the problem was that not everyone was on Signal. So you still had to message few people on WhatsApp. So in the end, it
yeah,
was just
that's why
causing
it
more
didn't stick.
confusion.
That's why it didn't stick. I would say potentially, and even I would say even when Google came up with Google Circle, and everyone was so excited, and
Yes.
the reason it didn't stick, I mean, they didn't. It is Google, so they obviously came in the game prepared, but yet still it didn't stick because not everyone was same active as everyone was in Facebook back in those days. No one
Yes,
is actually,
exactly,
no
exactly.
one uses Facebook nowadays anymore. But yeah, at those
No,
times.
Facebook is being used. It has a billion users, but now Facebook is used by organizations, by people. I mean, for other bits that you are not doing, say on Instagram, Snapchat, or TikTok.
Yeah, yeah, yeah.
Basically, the boring stuff.
Yeah, absolutely. I mean, yeah, it still has quite a large user base, and yeah, I mean, you can't really judge from just one country and your surroundings and
Exactly.
circle. And there's countries where people go Facebook instead of going Google, that I'm aware of.
And
So
then there are like US is majority iPhone. Most of the other markets are, and UK is also majority iPhone users. Asia, Africa, Americas, the Latin Americas, they are mostly Android users. So depending upon the kind of handsets you use, it defines what kind of apps you'll use. A lot of people, young people are on Snapchat or TikTok. A lot of the older generations, they are more used to Facebook. So it's different demographics as well. So people who are listening to this talk and who want to actually try Web 3.0, there might be a certain age group who are actually quite interested in looking into it and taking the risk of actually buying a domain, buying an NFT, etc. And there might be a certain age group that may be averse to it. And that all comes down to your local laws and regulations and your surroundings and how much risk appetite you have based on your current income or whatever, wherever in life you are. So, yeah, I mean, we are talking about all these things in the hope that you have gained some bit of knowledge and in the hope that you try something new because that's where the internet is heading towards a world where you own the data, you define your identity, and you can move the data from one place to another place, and it is completely open. There is nothing hidden behind the walls. All the transactions on Bitcoin, every single transaction that has ever occurred is available to download right now. So that's I think
absolutely.
that's the power. I think that
Absolutely,
drives the
absolutely.
message.
And yeah, again, I would encourage you guys to try it out if affordable for you. But one of the things I want to add to it is you have to remember that these domain names that you will purchase and you'll think, oh, yeah, I'm going to add a hosting account and then have my website hosted and people using Chrome and Internet Edge and others are going to come to my website. That's not happening. So that kind of that is a very direct indication of that. If you're buying it now, you're definitely going to be in the category of early adopter. This is like a very, very new technology, even though it's been a few months and the early, the very first hype is kind of settling down, but it's still at such an infancy in terms of technology and what it can do that you can't actually go to this domain name with Chrome. If I go and write rinatmalik.crypto, it's not going to return anything in Chrome or any of the usual browsers that we do. One of the ones that I do know or have heard that enables Web 3.0 is Brave browser. It's also
Okay.
based in Chrome, so you're not really missing out much. I have it installed in my computer, and it kind of imports everything from Chrome. It's actually quite easy to transition to Brave, and I didn't fully I didn't fully start using it. I use it as and when Chrome and Brave,
Brave has
but
their own coin as well, right? Own cash or
yes, yes.
coin.
So
Yes.
that's where you can really see how Web3 and all of these newer technology will help you, because it helps you not give out your data. And if you are giving out data, then you get some Brave coins, which is money, however small it is. And if you keep using Brave on a day-to-day basis, all the internet sites that you visited, you keep accumulating Brave coins as a token of against your data that you're providing. So that's like a direct example of what the power of these decentralized network and these modern technologies are. So yeah, going back to what I was saying is that you're still going to be a very early adopter. So I have faith in this technology, and I think it will have a future. So there is benefit in adopting to this technology if possible. However, you think would be good, but yeah, the indication of it is you can't use the regular browsers to go to this domain. So at the moment, Web 2.0 sites work differently than Web 3.0 sites. So, the usability, you still have various usability. For example, your wallet can be your domain, but uh, in terms of the your usual Web 2.0, it's not replacing your Web 2.0 domain in that sense just yet. It's obviously, I would encourage you guys to do your research, do more studies, and find out more, and then based on that go forward. But definitely worth checking it out. Even if you don't want to buy one, you definitely want to find out, because it is going to be something in the near future, and you want to be aware of it when it becomes more mainstream.
Definitely, definitely, and I think it's a very exciting topic. If you keep hearing, or if someone mentions to you Web 3.0, at least now you have an idea of what they're talking about, and I think that's a good starting point. And that's the aim of our podcast. I mean, you hear about something new and interesting technology, and we try to deconstruct it for you, try to give you examples, try to give you its pros and cons, and hope you have learned something from this talk today. So thank you so much for listening in, and please share your feedback, post, give us any questions that you have, or recommend us topics, or even recommend us guests that you want us to interview. So yeah, thank you so much for tuning in, and see you next time.
Thank you, guys. See you later. Bye.